Hello everyone, my name is Tanjim Hassan and today I will explain the circular flow of macroeconomic activity and how income and spending move within an economy. Understanding this flow help us analyze key economic indicators like GDP, national income and sectoral interaction. Throughout this presentation, we will discuss four economic models starting from the simplest one sector economy to the more practical four sector economy. So let's begin. In macroeconomics, the circular flow of income and spending describes how money moves between different sectors of an economy. There are four key sectors involved in this flow. First of one is household. Household means consumers who provide labor and buy goods and services. Then the second one is business. Business also known as farms. Farms or business is producer who use resources to create goods and services. Then the third one is government. Government regulates the economy, collects taxes and spends on public services. Then the last one is external sector or foreign trade. Foreign trade or external sector involves with import and export. Depending on how many sectors are included, we classify economics into different models that are one sector economy, two sector economy, three sector economy and four sector economy. Let's start with the simplest model, which is one sector economy. The one sector economy is the most basic and hypothetical model. It consists of only households who act as both producer and consumers. Example can be a small fishing village where people depends only on fishing. There is no trade, no business and no government. But one thing's to clear that this model is unrealistic for modern economic since no economy exists in isolation. Now let's move to a more practical model, that is two sector economy. In a two sector economy, we introduce businesses or farm along with the household. These two sectors interact like household provide factor of production to farm. The factor of production are land, labor, capital and organization. In returns, the business pay rent for the land, waste for the labor, interest for the capital and profit for the organization. Farm or business use this factor of production to produce goods and services. Households spend their income to buy goods and services from the business. This completes the circular flow. Here are some key assumptions in this model. The first key assumption is there is no government intervention, there is no foreign trade, and there is no savings. That means all income is spent or reinvested. So the income formula will be income equal consumption plus investment in two sector. This model is still simplistic because it assumes that all income is spent, which is not realistic. That's where the government steps in. So our next model is three sector economy. Now we introduce a new key sector, that governments. The government collect taxes from business and households. The indirect taxes like sales tax and direct taxes like income tax. Now we introduce a new sector, the government. The government collect taxes from household and businesses. Indirect taxes like sales tax and direct taxes like income tax. The government have some spending also. Government spends on infrastructure like roads, bridges, education like school and university, healthcare like hospital, medical research. The government also regulates market to prevent monopolies and inflation. The government provides subsidies for essential industries. The government also redistributes income through welfare programming. So now our income formula will be income equal consumption plus investment plus government spending. But what about international trade? That's where the external sector comes in. So we now discuss our fourth sector economy. That is our last economic model. A fourth sector economy is the most realistic because it includes the external sector, also called the foreign or overseas sector. The overseas sector turns a closed economy into an open economy. It is connected to the other sector through two flow of money, that's are foreign trade and foreign exchange. Like the other sector, each flow of money is paired with a flow of a factor of production or goods and services. The external sector connects the economy to global trade through two key flows, that are export and import. Exports means goods and services sold to other countries. Exports brings money into the economy. On the other hand, import means goods and services bought from other countries. Imports causes money flow out of the economy. Here, if export is greater than the import, then the economy grows. On the other hand, if import is greater than the exports, then the economy shrinks. So our new income formula income equal consumption plus investment plus government expenditure plus net export. Now let's talk about the balance between leakage and injection in the economy. Not all money stays in the economy. Some money leaks out while some flow in to keep the economy running. Leakage means money leaving from the economy. Leakage can be done by saving, taxes, and imports. On the other hand, injection means money entering the economy. Injection can be done by investment, government spending, and export. It is important to realize that for economic growth, injection must be greater than the leakage. Finally, let's summarize what we learned today. In today's presentation, we explore the four types of economic model and how money circulates between household, farm, government, and the external sector. In one sector economy, we saw this is simple theoretical model with only household. In two sector economy, we saw interaction between household and businesses. In three sector economy, we saw government regulate and redistribute resources. In fourth sector economy, we saw the external trade affect economic growth. Now, at the last, we can say a balanced circular flow ensures a stable, growing economy. When injection exit leakage, the economy expand. If leakage exit injection, the economy contract. A healthy economy depends on a balanced flow of income, spending, and trade. That's the end of my presentation. Thank you for your time. Now, I have loved to hear your thought. If you have any question, feel free to ask me in the comment box. Thanks for watching.